Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Hilliard MacBeth, author of the second edition of the book, When the Bubble Burst, Surviving the Canadian Real Estate Crash. He's also a portfolio manager and financial advisor in Edmonton. His website, MacBethMcLeodPartners.com. Welcome back to the show, Hilliard.
Nice to be back on this snowy day in Edmonton.
And in Vancouver, we're just getting over a major wind and rainstorm that had, in reality, cut off every road access to Vancouver, if not for a couple of hours due to flooding, landslides, mudslides. And today, overlooking the Fraser River, there's nothing but clumps of debris, trees, and I'm waiting for the occasional house to float by. It was a brutal storm.
Yeah, you forget that Canada's still, a little bit of the wilderness kind of frontier, pioneer place.
If you go on Google Maps and fly straight up from Vancouver north, you see no signs of civilization until you hit St. Petersburg, Russia. We do live on the edge of the wilderness here.
The edge of the world.
Yeah, exactly. Well, for people who like to stay on the edge of their seats, we have, things that we're talking about right now, supplies, the rail lines from Vancouver, and we're the one of the biggest container ports in North America. So, of course, if supplies get tied up here, you have supply shortages all over. Hilliard, some people are saying these supply shortages are contrived, or are they real, or is it kind of a mixture?
Well, I think there's some people taking advantage. There's no way to prove this, but it strikes me. For instance, I just saw an ad for a turkey in the American Thanksgiving is coming up, and it's a $75 turkey, U.S. dollar, and I don't know how many pounds it was, but a big turkey for Thanksgiving. And somebody said, what supply chain disruption caused that price to go up?
Yeah, you're not usually bringing turkeys in from Asia, I don't think.
I don't think so. No, it's usually just a few miles outside of town. There's a turkey farm, but so is there some gouging going on? For sure there is. And the other thing that strikes me as odd is the ongoing shortage of chips, semiconductor chips for automobiles. So the automobile manufacturers, their manufacturing is way down. Their supply of vehicles is sparse, and yet I'm wondering, of course, with my interest in electric cars, I'm just wondering if the demand might also be faltering a little bit because I think people are suffering from the Osborne effect, it's called the Osborne effect. Sort of like when you've got your iPhone and you're thinking about upgrading, and then there's a new one coming out, but not until next year. Sometimes you just keep the same one for a little bit longer and wait for the new one to come out. And people are waiting for the new electric models to arrive, perhaps. So they're not sure if they should go with one more gasoline-powered vehicle or go to electric now. So there might be some delay, and it's going to be a very difficult time. So I think there's some stuff going on. And then, of course, the big thing is, what do the central banks do? Do they fight inflation, or do they just sit on their hands like they've been doing up until now and hope that inflation goes away?
Right, because when we had inflation like this last time in the late 70s, early 80s, I remember in 1981, the Canada Savings Bond paid 21%. And I remember I put together as much money as I could to buy that 21% bond because I thought they'll never be this high again. Yeah,
they never did. And every year after that, they came down. Now, that particular year, I remember, so it started in 1978. It was 9.5%. And then every year it went up. And they came out on November 1st, right around this time of the year. and every year it would go up, but it was usually the higher rate was just for the 1 year, and then after that it would come back down again. So they would guarantee, I think if I recall, they would guarantee a minimum of say 10% or something like that. But for the next year it would be 19 and 20 or 21. That was sort of the peak year. But the 20-year bonds peaked out at around 15%, and that was the bargain, because of course then you've got 20 full years of. I remember in 1984 there was a 20. So interest rates had come down a little bit by then, but there was a 20-year bond that matured in October 2004, and you could buy that at 15% interest. Now that was the real bargain. And the even better bargain was what they call the zero coupon bonds, where you bought it at a discount. There was no annual payments, just one final payment. And those ones at 14% were selling for 8 cents on the dollar. So if you put $70,000 down, you got $1 million maturing in 2004. And it seemed like a bargain at the time, and it was a bargain, because of course we didn't know these rates were going to come down so far over the next 40 years, but they have. And of course it would have been phenomenal to have those returns.
Right, but the central banks aren't making any noises about boosting rates in the immediate future. Maybe sometime 0.25% sometime next summer or something like that. If they were serious about inflation, the rates would be going up now, wouldn't they?
That's right. Well, so they're doing two things. They're buying bonds and mortgages to keep interest rates low, and then they're also they've also got their rates at zero, essentially 0.25%. So call it zero. So what they're saying in the Federal Reserve, this is the one that matters, is they've started to exit the bond buying program. So they're reducing it by so many $1 billion every month. And at the rate they're reducing it, they will stop buying bonds altogether by June of 2022. And then that's when that's when most people expect the first interest rate increase to come after that. So they're saying they won't be buying bonds and raising rates at the same time. They'll finish doing one, and then they'll start doing the other. But the term that people use is called behind the curve, and they're way behind the curve, because inflation last week came out at 6.2%. So it's crazy that the 10-year U.S. Treasury bond is at 1.6%. I mean, the inflation rate is at 6.2%. But luckily, people don't have to accept that. They can buy what are called inflation protection bonds in both Canada and the U.S., and they can get around that. They don't have to accept that ridiculous offering from the government.
Gold and gold mining stocks. What's the story there, Hilliard? You've done some research.
So the gold, traditionally has been an inflation hedge, and I went back all the way back to 1919. It's not that interesting. From 1919 to 1971, it sort of stays the same price. There was a couple of, but the gold price was officially adjusted. So for almost all that time, it was around $35 US. And then in 71, Nixon let the gold price float. And what happened then was it ran up pretty steadily through the inflation in the late 70s, and it hit about $850 an ounce in 1980, and that was the peak for quite a long time. And then for 20 years, didn't do much, and then from about 2002, so about 20 years ago, it started to rise again, and now it's at $1,800. So it's actually done pretty well, but it hasn't been a spectacular inflation hedge. I mean, if you figure $850 to $1,800 over that period of time, you should have gotten a much bigger gain than that if you take the peak in 1980 40 years later to be at 1,800. So it looks like gold could potentially be the sleeper in this thing in terms of playing catch up with inflation. It has done well recently, like it has actually started to move. But when you take the full term of the period from the last inflationary period we had in the 1970s to today, it hasn't really been a great inflation hedge. So, but that's because people aren't that interested in gold. They've become interested in other things like Bitcoin and other things that are more attractive. The same kind of people that would have bought gold, they call them gold bugs, are now the same people that are buying Bitcoin and other crypto coins and that sort of thing.
Yeah, you were just talking about that off air. The I don't know if they're millennials and Generation Zers or Zers if you're in the U.S. They're not doing their idea of wealth building for the future, and their retirement isn't getting a high-paying job. Can you maybe explain what you heard about this?
Well, so I get asked by people that say, well, should I buy a house? You know, they're like 22 years old or something. And of course, the attraction is if they can get a loan from their parents for the down payment, and then they can buy a house. They don't actually have to have any money. And then they see that house prices in Canada have gone up, well, lately they've gone up 20%, but for the last 20 years, they've gone up an average of 7% a year. So they would say, well, if I could buy the most expensive house I can get my hands on, I could make $100,000, $200,000, $300,000 in just 1 year. And of course they have no chance of making that kind of money in a salary position because they don't have the education, they don't have the experience, they don't have the background. So what I'd like to say to them, although they don't necessarily want to hear it, and they don't ask me, but I would say, the most important thing is to get a high paying job first. And but they want to skip over that step entirely. Like this new phenomenon they have with the Robin Hood and the speculations like GameStop and all of the discussion on Reddit. A lot of those people don't have a lot of money, and maybe it's a good thing, I don't know. But Robin Hood, the online site, has made it possible for people with just $100 or $500 to get involved in the stock market. But up until now, the traditional sequence would have been to save up some money first, and that means getting a job where you've got enough extra money at the end of the month so you can put a little money away and save it. But that's so old-fashioned now. When I hear myself say that, I think, hey, sounds ridiculous when you say it out loud.
Well, Bill Maher, I don't know how reliable source he is, but a survey found 42% of American teens want to be an influencer. That's how they plan to make a living. 42% of them.
Yeah, I mean, if you could get on TikTok and have the right kind of following there, apparently you can make millions of dollars, or YouTube, or one of those things. So why would you go for a job where you have to get a college degree and then you have to start at the bottom and work your way up, and maybe by the time you're 50, you'll be making a good salary? Jump right onto the influencer thing. I have seen some people, with Tesla, for example, when they had the referral program early on, some people went online on YouTube with Tesla information, and people were hungry for information, and they managed to do pretty well because they would get if the people now Tesla's ended that program, so it's not available anymore, but the people would use the referral code, and then they would get enough. A few of them got enough to earn a free Roadster. Now the secret there, of course, is the Roadster hasn't been built yet. But if it is delivered, I think late 2022 or 2023, it'll be worth $250,000 US. So that's a pretty good price.
Well, Hilliard, I suggested to you that you buy a Tesla. You bought one. So what you're saying is Elon owes me money.
You didn't get your referral. Well, I think I may have mentioned this the last time we talked, but I figured out. So I was one of the very early adopters about my Tesla car, and I figured out because the Tesla stock is now up over $1,000 a share, and I remember what the Tesla shares were at the time I bought the car because I looked at it, being in the stock market business, and I should have bought the shares because if I put that same amount that I put into the car into the shares, they'd be worth $3.75 million now. The car is worth maybe $70,000, secondhand car, instead of $3.75 million. I think I might have made the wrong choice there.
Wolf Richter told us in the U.S. Used vehicle numbers show that they're up 40% in 1 year and 60% over two because you can't get your hands on a new vehicle. And if you need something to roll around in, people will pay any price for it.
I was at the Tesla showroom, and they said that they have one in Edmonton now. When I bought my first one, there's only one. Western Canada was in Vancouver, and they delivered the car to me on one of those big car transport trucks. And I had to meet it at where there was a big parking lot because the guy couldn't drive down residential streets. The truck was too big. And, so he backed it off the truck trailer and onto the road, and I signed the forms and drove it away. So that was now they actually have a showroom in Calgary, a showroom in Edmonton, and one in Vancouver. But so I was at the showroom in Edmonton, and I was looking at I'm getting the new Model S, and the Model 3, which is the more reasonably priced one. The delivery now is October 2022, so it's a full almost 12 months to wait if you order one today. So there's definitely a shortage of cars. So if you have an existing Model 3 and somebody really wants a Tesla, apparently you can sell it for more than what you originally paid for it.
Wow, that's interesting. And at some point, do you have to swap out the batteries?
So far, they give you an 8-year warranty on the battery, and my original car would only be 6 years old now. So as far as I know, I sold that one and upgraded to a newer one. I haven't heard of any of the batteries not lasting more than 8 years. I guess some of them in the early ones might have had flaws or something, but generally after 8 years the battery's still going strong. It's just that the company keeps making this car better. And so that's why I'm upgrading to the new car, because I want to get the longer range. So about a 630 kilometer range versus the 500 kilometer I have now. But the battery's still fine. And even if it wasn't, the car application for a battery is quite demanding. But you could also use those batteries for storage in your house. You could take it out of the car, put it on the wall, and use it to power your house. When you peak power times during the day, like in the evening or something, and or store it. If you had solar panels, you could put the juice into the wall storage unit. So those batteries will probably last a long time. They don't seem to degrade very much, and if they do eventually need to be recycled, they can be recycled to I think it's a pretty high degree, over 90% recycle.
We'll have more with Hilliard MacBeth right after this.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Hilliard MacBeth, getting back to, everybody calls him Mr. Tesla, Elon Musk. Elon Musk may end up paying a lot of tax. Can you explain that?
So he's got... he doesn't take any salary as head of Tesla, but he does get stock options. So he's got some options that were issued to him in 2012, quite a large number of options, and they expire this year. I think they expire actually in 2022, but he didn't want to wait till the very last minute. So he announced in September that he would start selling at some point around this time, and that's what he started to do. But as I mentioned, the shares are over $1,000. They hit $1,200 earlier in November. Now in mid-November they're down around $1,000. So they've come down $200, maybe partly because of his selling. But if he sells all of those stock option shares, he would end up paying taxes in the range of $10 to $15 billion, because his gains would be around $30 billion in gains. His total shares are worth $300 billion. He's talking about selling up to 10% of his shares, so $30 billion. In California, apparently with the federal tax and the state tax, the maximum tax rate is around 53%. So he would obviously be at the maximum tax rate. So he could pay as much as 10 or 15 billion if he sells all the shares. And the thing is, he kind of has to, because he doesn't have to, but it's very risky not to, because when he gets those options exercised, the way it works is they're considered as income. So it's like he's been, that's how he got paid. That's his pay. So therefore he has to pay full income tax on them. It's not capital gains tax, but it's full income tax. So, and the amount of tax he owes is based on the price of the shares when the options are exercised. So say he exercises them, the share price is $1,200, but he doesn't sell them. He hangs on to them. He still owes the tax based on the $6 gain up to $1,200. Imagine if the shares went back to $600, he'd be paying tax on the shares as if they were worth $1,200. He might not make any after tax. He might actually lose money in that case. So that's why most people that exercise those options end up selling them right away in order to make sure that they have the money to pay the tax.
Hilliard, thank you so much for chatting with us.
Nice to be with you again, Jim.
My guest has been Hilliard MacBeth, author of the second edition of the book, When the Bubble Burst, Surviving the Canadian Real Estate Crash. His website, MacBethMcLeodPartners.com. You can find him on Twitter at HMacBE. If you have any questions for Hilliard or any of our other guests, you can send them to info@HowStreet.com, our YouTube channel, Talk Digital Network. Find us on Twitter at House Street. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of House Street Media Incorporated.